about ordinary and necessary business expenses. So we already discussed, like I said, we already kind of talked about this with regard to educator expenses. And the same definition applies to business expenses as applies to educator expenses. So expenses have to be both ordinary and necessary, but there is also, so that's stated in the law, they've got to be ordinary and necessary. The courts, though, have also applied this third requirement of reasonableness. So, meaning you cannot claim a deduction for an amount that's more than what the market would bear for that item. So, for example, if you hire your adult son and decide at your business and decide to pay him $300 an hour as a stock boy, that is unreasonable, right? That is an unreasonable amount. What you're actually doing is just trying to transfer money from you, because you're probably in a higher tax rate, to him. So it also has to be reasonable. So let's just kind of review what ordinary and necessary means. So necessary means that it is appropriate and helpful. Okay, so doesn't have to be you can't live without it. That's not the case. Because, I mean, let's be honest, most things we can live without, right? But they make our life more difficult. Like, so for an accountant, we use QuickBooks, not because we have to, we could still do everything by hand, although we certainly wouldn't get much business if we did because we'd be terribly slow. But we could do that, but QuickBooks helps us to do it more efficiently. So QuickBooks would fall under that necessary criteria because it is appropriate for the field and it is helpful as well. Ordinary means it has to be customary or usual in the taxpayer's particular business. So, try and think of an example here.
A computer?
Well, computer, you could probably make an argument that for almost every field, a computer would be an ordinary expense anymore. So let's say you're an accountant and you purchase, what's a good example? You really like baking cakes in your free time, and so you purchase an oven so that you can bake cakes. You don't have a business for the cakes. You purchase an oven because you like doing that. Well, that's not an ordinary expense for an accountant, right? It's also not necessary. It doesn't help us in any way to do our accounting work, right? So it's not related, and it's not customary. Okay. Now this is going to be a highly litigated area because one person's definition of ordinary and necessary may not be the same as the court's definition of ordinary and necessary, right? Yeah.
So then who decides? Is it just like if you get audited, they go through it and decide
Yes.
if it matches all those?
And if it's questionable, chances are the IRS is going to say, no, this is not ordinary or necessary. But the taxpayer has the option of fighting them on that. They can argue that, yes, indeed it is. And a lot of taxpayers do, and a lot of taxpayers are successful when they go through the courts. IRS doesn't always win. So, it's not that if the IRS says no, that it's definitely going to be no. Exactly. But the IRS has they've done a great job of putting the fear of, instilling fear in the taxpayers. Everybody, yeah, exactly.
People even go to jail.
Yeah, but you know what? The people who go to jail have lost in court and they have ignored the IRS and they have,
They deserve it.
well, I mean, it's to the point where the only thing left is to send them to jail.
Okay.
Yeah, usually they don't send you to jail for like one thing that you put on.
Exactly, and they don't send you to jail for honest mistakes either. Yeah.
So like, only because I have friends that are in this business, erotic dancers.
Uh-huh.
So like, what if because I know erotic dancers that have never paid their taxes.
Mm-hmm.
So how do they monitor that? How do they and then and
It's a cash business.
It is a cash business. So cash businesses are difficult, but the IRS they know they have averages
Okay.
of what should be declared in certain areas, and so they will use that to, and it would be up to the tax, because it's a civil matter, it would be up to the taxpayer to prove them wrong.
Okay. But like their ordinary or necessary expense would be,
Clothes.
yeah. So they could.
Or lack thereof.
Right.
Yeah. But like,
Yeah.
for those that get modifications,
Mhm.
would that considered an ordinary expense? Because like,
See, that would probably be an area that could be litigated. That one's open to interpretation.
okay.
Or necessary.
Mhm.
Losing money.
Well, I
Right.
mean, it might be customary and usual, right?
Yeah.
It might be ordinary, and helpful.
So like they could.
Is it appropriate? They might question appropriate. Um,
Job appropriate.
So I mean,
But like, are these like deductions that they can take?
as long as they declare the income, yeah. They don't want to take the deductions without declaring the
Oh,
income.
none of those girls are claiming their income.
Okay, so here's the thing, you don't wanna, if you cheat in one area on your tax return, you do not wanna cheat anywhere else. Because what they do is, like, if they find one thing that's wrong, they're gonna look at everything on that tax return. So, like, in those cases, if they're claiming expenses that they don't have, then it would become very obvious that they're not claiming income that they
Right.
have. So it's, yeah,
Tell them to stick with the standard.
yeah. And there's a question as well as to whether or not they should be W-2 employees
Right.
and not contractors. So, moving on.
Sorry.
That's right. So we got this.
It was
third-
relevant at least.
It is, absolutely. And there are a lot, I mean, there's all sorts of varied types of industries,
Mhm.
right? And yeah, there are. So marijuana is legal. Recreational marijuana is legal in several states. You are supposed, even if it's illegal and you are selling it, so in Iowa it's not legal.
Yet.
Even if you're selling, yeah, we'll see if that ever, Iowa's, I could see Iowa holding off on that one. But even if you are selling it, you're still supposed to declare the income. Yes. So even if you are engaged in illegal activities and you are receiving income from it, you are supposed to declare it on your taxes. And that is another way that they will that they will impose penalties on those that they catch. So it's not just maybe a criminal charge, but then they're gonna look at your taxes as well. Did you declare this as income? No? Well, we're gonna send the IRS after you as well.
Okay, so like, so just based off of the last few chapters that we've had, basically the higher the income, the more like your,
Likelihood of,
well, so like let's say, like, I know one of the girls makes probably close to 200K a year. So her with being able to deduct things, because it's like 60% of the for certain things, and you know, are you following? My brain is not.
okay. Are you talking about you're talking about the charitable contributions?
Like your
with the
itemized
60%.
deductions for
Mhm.
anything.
Yeah.
So like,
Well, there's really not an itemized deduction that would apply. I mean, and remember, itemized deductions are personal expenses. They are not business expenses. So anything that they're doing related to that income is not going to show up on their Schedule A.
Okay.
It's
So
gonna
for
sh-
the business expenses, is there like a cap that like you can't go over this to deduct from your income to make it taxable?
No.
There is no.
But there's no limit to it, but the IRS may start to ask questions
Got it.
when, if they think it's unreasonable. They've
Got
always
it.
got the right to then ask questions and dig in.
Got it. Okay.
So, good for them, 200K.
Bro, there's one girl that makes like 3K a week, and I'm like,
Wow.
be
Yeah.
nice, but like, no, I'm good.
Okay, so, then we got this third standard that came through the courts, and it's reasonableness. So meaning, when I say it came through the courts, it means that there was a court case that, maybe the taxpayer met these guidelines of a business of expenses being ordinary and necessary, but they were unreasonable in amount. Okay, so the court came in and said it also has to be reasonable in amount. So here's an example of that. So Minato owns a successful landscaping business, is in the 35% marginal tax bracket. He employs his 17-year-old son Brian as a laborer. To reduce his taxable income and provide money to Brian for college, Martin pays Brian $25 an hour. However, the going rate for that work is $10 an hour. So that is unreasonable. It would be an ordinary and necessary business expense, but the amount is unreasonable, right? So that extra $15 an hour, now he can pay Brian the $15 an hour, and Brian's gonna have to declare that as income, but Minato does not get to claim as an expense $25 an hour. He's gotta claim $10 an hour as an expense, because it's unreasonable, yeah.
So businesses get to claim what they're paying their employees as an expense
Mhm.
for
Yes.
taxes?
Yes, yep, wages are a deductible expense,
If they're at a reasonable price.
as long as they're reasonable,
Right.
exactly.
So like if the industry standard is to pay somebody $10 an hour, and because you wanna be above industry standard and you're paying them $15 an hour.
Well, and it would depend though on like what geographic area, what the demand is, like, so an
Right.
argument could be made that, okay, yeah, normally that would be unreasonable, but we've got nobody else that can do it.
So if you like pay
So-
everybody at that higher wage, can you
Yeah.
deduct that whole wage then if it's not just like a special treatment for
And again,
like,
that
you
would-
know this person?
Well, and again, that would be on a case-by-case basis, really. Because what they're looking at here is, are you trying to income shift? Are you trying to shift income from a higher tax bracket into a lower tax bracket in order to avoid net those taxes, right? Okay. Let's see. And they talk about that here as well, the calculation of what the tax savings would be. So $2,500 between the two of them would be their tax savings if they did that. So who knows, it may still be worth it even though he doesn't get to deduct. Well, probably not. Oh, yeah, it would be, because Brian's tax bracket is lower. So anytime that income is gonna get shifted to a lower tax bracket, net, it's gonna be overall a better deal. Okay, so in addition to that, there are certain specific types of transactions that are never deductible. Bribes, kickbacks, other types of illegal payments. Payments for certain lobbying and political expenses. So donations to political campaigns by businesses are not deductible. They're also not deductible to individuals. Also, payments for fines and penalties. That would include if the business was, say, late on their payroll taxes and they had to pay a $200 fine. That $200 is not deductible to them. That is not a deductible expense. Okay, so these categories, even if they are ordinary, necessary, and reasonable. And in some cases, bribes and kickbacks may be ordinary and necessary and reasonable, right? If you're in an industry where that is common, or you're in you're working in an area where that is common, you're an American company, you're subject to American taxes, but you're working in a location where bribes and kickbacks are just part of the deal. That's how you get things done. That may be a business expense, but it's not a deductible business expense. Okay. For that. So we talked about the Schedule C has a list of expenses, but as I mentioned, that's not an exhaustive list. There are lots of other types of expenses as well. Questions before we start talking, I think, about depreciation?